Welcome back to Alpha Market Meridian, where we turn volatility into profit, not noise. I'm your host Eric, 15 years in institutional desks, and this is the only daily brief that covers all 8 critical assets across time zones. Today is May 8, 2026. And gold just printed something that every professional is watching but most retail traders will ignore until it's too late. Stick with me, because at the end I'll give you 3 actionable strategies from conservative to aggressive, with exact prices you can place on your platform right now. Let's dive. Gold opened at 46.93, rallied to 47.64, then collapsed back to 46.87. That's a $77 rejection from the high. But the real story isn't the intraday swing. It's the fact that 5 major moving averages on the daily and 4-hour charts just aligned for a death cross. If you're long gold without a hedge, you need to hear this. If you're waiting to buy the dip, your entry might be a lot lower than you think. Let me give you the verdict right now. Gold is in a neutral to bearish short-term trend below 47.64. The 4685-4687 zone is the immediate decision line. As long as price trades below the 4718-4725 area, sellers have the edge. We are not in a strong downtrend yet, but the structure is cracking. The multi-week bull run from 3500 to 4700 is not reversed, but the first serious correction signal has fired. My base case: a move toward 45.55 and possibly 43.90 before any sustainable bounce. The bull case needs a daily close above 47.64. Until then, I'm treating every rally as a short-term sell opportunity. Now let's go to the charts, and I want you to imagine you're looking at your own platform. Start with the 60-minute chart. Price is hovering at 46.87, just below the MA20 at 47.05 and MA10 at 47.25. You see a clean rejection from the 47.64 high, and the last 4 hourly candles are lower highs and lower lows. The MACD on 60-minute just crossed negative, and the RSI, 6, is at 39. That's bearish momentum but not yet oversold. The real structure, however, is on the 4-hour time frame. Look at the moving averages: MA5 at 47.18, MA10 at 47.45, MA20 at 47.22, and MA40 at 4,705. All are sloping down, and price is below every single one except the MA60 at 45.66. That's a bearish stack. The 4-hour MACD shows a bearish histogram expansion, and the DMI, 16.4, is reading 24.65. That's a weak trend, but direction is clearly down. Now the daily chart, and this is where the warning becomes serious. The daily MA5 is 48.10, MA10 is 4,390. Wait, that's a huge spread. Let me double-check the data. The daily MA10 is actually 4,390? That's because gold had a parabolic rally from early 2025. So price at 46.87 is still above the MA10 but below the MA5. That's a short-term bearish crossover. But look at the longer Mars: MA20 at 36.94, MA30 at 34.02, MA60 at 3,511. All are far below, so the primary trend remains bullish. The problem is that the daily MACD, 12.26.9, is showing a bearish divergence. Price made a higher high at 4,764 but the MACD line didn't confirm. And the Williams %R is at 68, not oversold. The CCI, 14, is at 4,266? That can't be right. That's an extreme reading. Actually, looking at the screenshot, CCI shows 4,266.71. That is massively overbought. That's a screaming sell signal in most textbooks. So the bottom line: multiple timeframes are aligning for a pullback. Immediate support is at today's low of 4,685.20. A break below that opens the door to 46.58, then 46.15, then 45.55. The next major support on the daily is the MA20 at 36.94, a long way down. But the first real cluster is 4,555, which is MA150 on one of the charts, and 43.90 MA100 equivalent. Resistance above 47.18, then 47.45, and the key bull trigger at 47.64. If gold reclaims 47.64 with a daily close, the next target is 4800 plus. 2.4 Fundamental drivers and inter-asset linkages. Why is gold acting this way? Let's marry the technicals with the real world. In the last 24 hours, we had two key narratives. First, the US dollar index caught a bid after less dovish comments from a Fed governor. I won't name names, but the market repriced the probability of a June cut from 68% to 54%. Gold, being anti-dollar, sold off immediately. Second, real yields on 10-year tips rose by 5 basis points. Gold's biggest enemy is rising real yields, and that's exactly what we saw. Now, the inter-asset linkage you need to remember. Gold and oil both speak the language of inflation and geopolitics. Crude oil was down 1.2% overnight after a surprise build in U.S. inventories. Lower oil dampens inflation expectations, which reduces the urgency to buy gold as a hedge. That's a secondary headwind. Also look at Bitcoin. It dropped 3% in the same session, showing that risk assets are repricing. Gold sometimes behaves like a risk asset, but today it's trading as a dollar-sensitive commodity. Looking ahead 1 to 2 weeks, the focus is on US CPI next Wednesday. If inflation comes in hotter than expected, gold could initially spike on inflation fears, but then get crushed by higher rate expectations. That's the classic double-edged sword. If CPI is soft, gold might bounce to 47.64. The event that would invalidate my bearish bias is a daily close above 47.64 accompanied by a drop in real yields. Until then, sell rallies. Now let's turn this into money. Here are 3 trades, one for your sleep well portfolio, one for your active account, and one for the daredevils. Use only one at a time, and respect your risk limits. Strategy 1, conservative, high probability, small position size. This is for traders who want a high confidence trade with smaller risk. Entry condition. Wait for a retest of the 47184725 resistance zone, the 4-hour MA5 or MA10 cluster. If price gets there and prints a bearish pin bar or a 30-minute MACD crossover down, short gold stop loss, place at $6 above the high of that pin bar, roughly 47.32. That's a $1014 risk. Target 1, 4,685, today's low. That's a $3040 move. Target 2, 46.58, the next support on the 60-minute chart. Risk reward. At $14 risk for $40 T1, that's almost 3:1. 4 T2, $70 reward, 5:1. Invalidation. If gold breaks above 4,732 and holds for 2 30-minute closes, the trade is off. Don't chase. Strategy 2, standard, balanced risk reward, position size 1 to 2% of capital. This is what I call the institutional retracement trade. Entry condition. A clean break and retest of the 4,685 support level. Let price break below 46.85 on an hourly close, then wait for it to come back up to 4690-4695, a kiss. Short again, stop loss, 4,705, just above the hourly MA20. That's a $1015 risk. Target 1, 46.15, the daily MA5 from one chart, strong cluster. Target 2, 45.55, the MA150 level, trailing stop. When price hits 46.50, move your stop to break even. At 46.15, move stop to 4,635 to lock profit. Re-entry rule. If stop is hit, do not re-enter the same day unless a new setup forms. Strategy 3, aggressive, contrarian or momentum chasing, high risk. This is for experienced risk takers only. We are going to fade the initial bounce if gold falls hard. Entry condition. If gold drops quickly to 4,600, where there's a mini psychological level, and shows a 5-minute bullish reversal pattern, like a hammer or a 2-bar reversal, you buy for a fast countertrend bounce. Stop loss, 4,585, only $15 below entry. Very tight. Target 1, 4,640, target 2, 46.65 risk reward, 15 risk for 40 reward, first target, 2.6:1. Warning. This is the opposite of the directional bias. Only. Take it if the drop is accelerated, e.g., $20 in 30 minutes, and you see exhaustion. Never size more than 0.5% of capital. And if gold breaks 45.85, the trade is dead. Do not average down. I'll say it again. Strategy 3 is for professionals. If you are new, stick to strategy 1 or 2. Before you even place a trade, set your stop loss. No exceptions. Never risk more than 1% on a single gold position, because gold can gap $50 on a headline. Also, check the economic calendar. The Fed's Williams speaks in 6 hours. If you're holding a position into that, you're gambling, not trading. My rule: close all intraday trades 15 minutes before any major speech or data. Survival first. So let's wrap up. Gold is showing its first serious bearish structure in weeks. The 4685-4687 support is the line in the sand. Below it, we target 4615 and 4555. Above 4764, the bulls retake control. For tomorrow, the main event is US jobless claims. A number above 245K could weaken the dollar and give gold a temporary bid. But my eye is on the daily close relative to 4718. Now I want to hear from you. Are you long or short gold at 4,687? Type your key support or resistance level in the comments. The most interesting answer gets pinned. And if you learned one thing today, hit the like button and subscribe with the bell. This is Alpha Market Meridian, turning volatility into profit every single day. We'll see you in the next video, covering the dollar yen and Nike 225 link. Stay sharp.